Welcome to Investing by the Books, a podcast by Redeye. I'm your host, Niklas Sävås, and next to me is my friend, Eddie Palmgren. How are you today?
I'm great and really excited to go to Omaha for Berkshire's annual meeting and also a few days in New York. We will meet previous guests, and if any of you listeners are also there, we would love to meet up. You can contact us on Twitter at IB_Redeye. Today's guest, Shree Viswanathan, will also be in Omaha for Buffett, and he will present on Willow Oak's event on April 30. Since 2018, Shree is the founder, president, and portfolio manager of SVN Capital. He grew up in India and came to the US to pursue graduate studies in 1989. He has worked in investment banking with mergers and acquisitions, corporate development, and as a portfolio manager.
And the book for today is a spiritual one, A Search in Secret India. Why did we choose this title? And some can wonder, did we already run out of investing books?
Not yet. We still have a few hundred investment-related books on our list. But we spoke to Shree, asked what books he would like to talk about, and he suggested this one as it has been very influential for him in his journey as an investor and person. So none of us had read it before, and we thought it seemed like an interesting classic. And as we have said before, we believe it's necessary to go into other fields to become a better investor. So this really fits that category.
And briefly, what's the book about?
First published in 1934, this book is a travel diary from India by Paul Brunton. He is credited with being the first person to introduce yoga and meditation to the Western world. And Brunton wanted to learn more about the powers of yogis and other masters in India, but with this scientific attitude. And he remained very rational, which is something that was appealing to me when I read it. And the book is full of these kind of remarkable stories as he goes around India and all the lessons that he is gaining from meetings with both real masters, but also these pretenders. And what I also like is that Brunton has a very candid and real purpose. He wants to learn and he wants to become a better person and a spiritual journey here. And this learning curve is something that is relatable for us in this ambition for the podcast and also as investors. How does the book relate to our quality rating?
So I think the point you made about Brunton meeting both real masters and pretenders in his journey is profound, and I think it's similar to how we try to understand the difference between good and bad people in our quest for rating the managers and the owners and board members, which is central in our people rating. As investors, we always need to keep an open mind and still be skeptical to what we hear. And one method is to demand proof and a track record. But some judgments are truly qualitative and subjective, which is why investing is a form of art.
We are grateful to have a very thoughtful investor and person on the podcast here to discuss A Search in Secret India by Paul Brunton. Here comes our conversation with Shree Viswanathan. Hi Shree, and welcome to Investing by the Books podcast.
I sincerely appreciate this and thank you for having me here today.
And where are you today?
I'm based in the northern suburbs of Chicago, a place called Lincolnshire, and working from my home office.
And can you briefly tell our listeners about yourself?
Sure, but before I even start answering that question, I'd like to thank this gentleman, Alexander Nordstern, who connected with me on Twitter. We've exchanged we've been in contact on a number of different topics, a couple of different stocks, and he's the one who introduced me to you folks. I think his Twitter handle is @AsonMoneyMess, and a huge thank you to Alexander for doing this. But to answer your question, a little bit about me. I'm originally from India, South India. I came here in the late 80s to the US as a student pursuing graduate studies in accounting. Initially had some interest in pursuing a PhD as well, but didn't see light at the end of that tunnel. And so just continued to work as an accountant. But after being bitten by some kind of an investment bug, I decided to go to the University of Chicago for my MBA, and I've been in capital markets ever since. initially as an investment banker, and then as an investor over the last number of years.
We'll get into your experience and your life now as a money manager a bit later, but coming back to your normal life today, how are your life and what are your 3 most important habits?
This relates very closely to the book that we're going to be discussing today as well. So, what used to be on an average about an hour-long meditation sitting in a pretzel position has evolved into an exercise that I call as ego reduction. It would be nice if I can get to ego elimination, but I call this an ego reduction exercise. This is a direct outcome of the book that we're going to be discussing, and the guru, the protagonist, his teachings. I'm sure we'll get to all that in a second, but that typically has been the first activity in my day on a regular basis. Journaling is the other one that I do on a very regular basis. Over the years, and particularly after I launched SVN Capital, I've come to appreciate the importance of this habit. There's a gentleman by the name of Chris Bailey, a Canadian, who has written a number of different books. One that sort of stands out is a book titled The Productivity Project. He says that the mind is not for storing information, but to be a fountain of information and to be able to think clearly and be a better fountain of ideas and information. I have to pour my emotions out onto paper, onto computer these days. And so I just write. Certain days it's just a bullet or two, and certain other days we spend hours on during the day, keep coming back to it, hours on end, journaling my ideas and emotions. And then, of course, we are in the profession of investing. Reading is a very important raw material or ingredient that creates that raw material, I guess. And, spend much of my day reading, about the companies or generally books and other articles. So I'd say those are my 3 important activities during the day.
You mentioned your education on accounting earlier, and of course that's important for investors. But you said you were bitten by the investment bug. Can you tell us about that story? How you became an investor as you work now?
Yeah, I think that's an important and an interesting question as well. So, but unlike many of the investing greats who worked as a young kid, mowing lawns or paper delivery or whatever that may be, using that cash to get started as an investor, making mistakes early on and getting started as an investor. That was not my path. I didn't stumble into investing until I was well into my 20s. It was actually, I remember the time at which point I became really smitten by this bug. And that was August of 1995. I was working as an accountant at Principal Financial Group in Des Moines, Iowa. I was on the international subsidiary, Principal International. They were setting up offices around the world, mostly in emerging markets. And I was an accountant on the Principal International side, traveling quite a bit. My office, my cube, was right next to the investment team's cube. And in August of 1995 is when Warren Buffett had announced the second tranche of Geico acquisition. There was about $2.3 billion. And I'm not even sure if the investment team had an investment in Geico at that point. But just that announcement seemed to create a lot of buzz. And while I had heard of Warren Buffett, I didn't necessarily know much about investing or Berkshire Hathaway or insurance and float and things like that. But that's what got me started thinking about what next. I'm an accountant, but is that what I want to do for the rest of my life? And that's what got me started. And I started investigating opportunities to sort of make that transition over. And that's when I decided to, a couple of years later, I decided to join University of Chicago. And as I said, I started as an investment banker and then transitioned into the buy side as an investor.
And for this conversation, you have chosen the book A Search in Secret India. Why is that?
This book had a profound impact on who I am, on how I have evolved and who I am today. I grew up in a city called Chennai in South India. It used to be called Madras. It's now called Chennai. My parents were religious. That's how we were all raised. But growing up, I was always interested in the spiritual aspect rather than the religious aspect. And I somehow kept feeling uncomfortable about how that was a little odd relative to the rest of the family. But I kept pursuing that, and even as a high schooler, particularly as a college student, I started testing out a number of meditation techniques, transcendental meditation. This was made famous by the Beatles, and then later on, techniques by a guru from Burma, a methodology called Vipassana. Along the line, a couple of other methods, another guru by the name of Paramahansa Yogananda. I know the words are fairly long. That's how the Indian names are. But his methodology was something called Kriya Yoga. I even read a little bit about Thich Nhat Hanh's meditation technique. Read a book by J. Krishnamurti, which I have to tell, I did not understand any of it at that time. But I kept testing many different methods. I'd get excited about a particular type, and then I realized that over a period of time, I kept losing interest in that method, and I started looking for something else. But this spiritual aspect always, was important for me. And, that's when I remember, I remember reading the book the first time. And it's, this may be a sort of a good time to explain to your listeners as to what this book is about and who wrote this book. So the title of the book, as you said, is A Search in Secret India. It was written by one Mr. Paul Brunton. He was a writer, philosopher, a journalist from UK in the early 1900s. He wrote the book in the 1930s or maybe 1940s. His experience was in the 30s, and that's what he was writing about. So he was generally skeptical about the spiritual, the so-called spiritual aspect of India. He wanted to explore that aspect firsthand, and so he visited India. So essentially, he was looking for gurus, and he was wandering through much of the country, and kept stumbling onto many of the quacks or self-described gurus. So this book is essentially his travelogue, which then became his spiritual enlightenment log. The book goes on to talk about how he stumbled onto this particular guru that he really respected. He was convinced that he's the one that he was looking for. So he asks him if this guru can take Paul Brunton as a student. He says no, but he recommends this particular individual, Ramana Maharshi, in a small town in South India called Tiruvannamalai. By the way, this place, Tiruvannamalai, is only a couple of hours from where I grew up. I remember going there with my parents, and it did not have any impact on me at that time. But back to the book. When I read this the first time, I was impressed, particularly probably because the gurus and the locations that Paul was writing about were they resonated well with me because I had also visited those places, some of them, and probably that's the reason why it sort of resonated well with me. I left it there. And then some years later, I was listening to this interview of one Mr. David Godman on a podcast titled Buddha at the Gas Pump. It's an interesting title. If you are ever interested in exploring this spiritual / theological aspect, it's a good one to listen to. But David Godman was on that podcast once and answered some incredible questions, and he referred to this book. David Godman, by the way, is also from England and has been living in Tiruvannamalai since the 1970s. And he went on to explain his own path of how he stumbled onto Ramana Maharshi's teachings and what his experience has been and how he interprets the Maharshi's teachings. That then forced me to go back to this book, and that's when I really picked up some phenomenal nuggets from the book, and I've then gone on to explore a lot more in that area. So Paul Brunton wrote this book, and essentially, even though Ramana Maharshi was popular locally in that city and neighborhood and in South India, Paul is the one who sort of made him an international figure through this book. Later on, a gentleman by the name of Arthur Osborne took the baton, and he has written a couple of different books, and that's the book that got David Godman started. Godman is still alive, and he has written a number of books, and his teachings have been exceptionally helpful for somebody like me to understand the teachings. So at this point, you and your listeners are probably wondering, okay, that's all great, but what is that? What is, what do these things have to do with an investing podcast or investments? Let me try and make that connection. It's widely accepted and is well known that ego is the source of many problems in life, particularly in investing, in the investing arena. I at least, think of ego as the primary source of problems. It makes you overconfident, makes you think that you know answers to questions that you really don't. Yada yada yada. There are a number of ego-originated problems, particularly in the investing arena. And from the moment one wakes up in the morning till one shuts the eyes at night, the process of this reinforcing the ego goes on. What do I mean by that? Well, the subject, I, for example, subject, I, say, if I taste a good ice cream, what's the experience there? The experience is I, the subject, have tasted a good ice cream, the object. Or I, the subject, have seen a beautiful picture, the object. And this goes on for, throughout the day. And essentially what happens there is the subject-object relationship reinforces the ego. And from our standpoint, from investment standpoint, if my objective is to reduce the influence of ego, hopefully eliminate, I don't know if I will ever be able to eliminate the influence of ego in my lifetime, but I'm trying. And that's where this explanation, the book, David Godman's explanations in the book and Ramana Maharshi's teachings come into play. And that is, don't reinforce the subject-object relationship, but try and undo it. How do we try and undo it? The recommendation is to observe the observer. Ask who is having that thought, who is tasting that ice cream, who is observing that beautiful picture. And once you start exploring that question, who am I, or who is going through this experience, it so happens that the amplitude of the emotional movement sort of reduces. And that is the reason why I personally have become a lot more attached, enthusiastic, and a practicer of this method. And that's the reason why I have recommended this book for our discussion today.
And as you said, you have these ego reduction practices. Can you say a little bit more how you do that practically?
Yeah. So, as I said, for a long time, I've been a regular meditator. There were times when I was very regular, and there were times when I was irregular. But I would always try and take up somewhere between 30 to 45 minutes a day, just sitting in pretzel position and meditate. As I said, I went through so many different methodologies: transcendental, vipassana, Kriya Yoga, all those different methodologies sort of required that I, again, the subject, was thinking about either nothing or some kind of light or something that each one of those methods recommended. And once I started going back to, Ramana Maharshi's teachings, when his recommendations became a lot more important for me, I sort of gave up on that sitting in pretzel position and constantly asking myself this question, particularly when I'm either really happy or really sad: who is going through this emotion? And that's not a specific time period during the day sort of an exercise. It's an ongoing exercise. Many times I missed it. Many times what would happen is I'd go through the emotional up or the emotional down. And after that event is when I will remind myself that I need to ask this question. So it's a constant practice, but I can tell that it has had a profound impact. As I said, my hope is to tamp down that emotional amplitude all the way down, but I'm not there yet. So it's an ongoing process. That's a recommendation directly from Ramana Maharshi.
It's really interesting. And I just started to think about a book I read a few years back from Tony Robbins about that. I mean, you shouldn't use language as "I'm angry" or so on. I mean, have you read the book? And I mean, can you relate that to this that you're saying now?
Yeah, I have heard him speak. I've heard him talk about the book. I've read a few of his books, but I've not read this particular one. I can certainly relate to this, that reinforcing the subject I, if we can eliminate that, life would be much more happier. Going back to Ramana Maharshi, he never called himself by his name. From what I understand from David's writings and Paul's writings, from those things, what I understand is that to eliminate that subject I, he never referred to himself as Ramana Maharshi. He let others call him that, but he never really, referred to that term. And that's probably what Tony Robbins is referencing as well. Various different Western practitioners have arrived at that point. A gentleman by the name of Dr. Wayne Dyer, he passed away a few years ago. He's written a number of books. Western theologian. He's referenced Hinduism and spirituality in a few of his books, but he also references this point about I, eliminating that I. So I'm not sure if I answered your question, but
no, it was a hard question as you haven't read the book. But it was just about that. I mean, reinforcing the emotions. That's really what that book is about. I think that don't say like I'm angry, because then you get even more angry. And so if you state that, then so yeah, that was what made me think about that.
Yeah,
my interpretation from trying to reduce or removing the ego is that you try to go beyond the mind and not to think about the thinker and observe the thinker in you. But in the book, I also like this quote that the body influences thought no less than thought influences the body. So it goes, when you look at the mind and the body, it goes both ways. And so I'm wondering if you, and maybe it's a good to start with the body and then move to the mind and then try to go beyond the mind.
Yeah.
How are you taking care of your body and health in that sense?
I remember that quote. It actually reminds me of George Soros and his famous signal from his back pain. Not sure if you've heard this, but whenever he felt severe back pain, he knew it was time to tweak his portfolio. It actually is somewhat reflective of this particular statement. The body influences the thought no less than the thought influences the body. For me to sort of relate back to this book, a number of different points, but I'll highlight a couple related to this. The lessons from the book as it relates to this statement is, even if you're skeptical about something, it just helps to keep an open mind for serendipity to hit you. And then, the other point that sort of resonated with me is, Paul had the vision to know what he was in front of. He was in front of a great sage. He had the courage to stick around. Remember, this is a Brit who was in a very hot South Indian small town in the 1930s. He's in front of an Indian saint who's guiding him through self-realization exercise. He had the patience to stick around he eventually gets the experience himself. Now, I'm sure you've read the book by Thomas Phelps, 100 to 1 in the stock market. This is essentially what Thomas Phelps wrote about in his book. To be a successful investor, one needs to have the vision to see the opportunity, courage to buy it, and patience to hold it. Patience is the rarest of the three. So while this is a book about spirituality, I think since much of investing and much of spirituality is about mind, we can connect the dots at different points. This is how I connected the dots in a couple of different points.
And from reading the book, you can really see how these masters, the yogis, can really, just turn off their mind. Similarly, maybe to Charlie Munger is famous for just shutting down.
Yeah.
And I think some masters even give this wow of silence, not to speak at all. So I wonder, have you tried any of this, and has it helped you in any way?
Yeah, in fact, Ramana Maharshi's teachings, his primary recommendation is to be silent and just observe. And for those that are a lot more active, that come to him and say, okay, I've tried that, but can you actually make some other recommendation? For those, he recommended, ask this question, who am I? Who is experiencing this? Observe the observer. So that's from the book. For me, yes, as I said, meditation, silence, now this ego reduction or self-realization is a part of my daily life. That all again connects back to the mind and thinking, right? Thoughts and thinking. It was it Henry Ford? I think it was Henry Ford who said, thinking is the hardest work there is, which is probably the reason why so few engage in it. For the professions that we have chosen, that thinking is the important raw material, and I'm always constantly working on improving the quality of that raw material. And this recommendation to sort of open up the fountain of ideas by slowing down the emotional amplitude, journaling, getting the emotions out so that you can allow serendipity to hit. All that sort of is an ongoing exercise that helps me. As I said, particularly when I'm down or really happy, I let this exercise go full force. Who is experiencing this, and all that entails remaining silent, observing your own thoughts. If you actually stopped for a minute and considered, your thoughts as a sort of a big rectangular box and peered into it, and I think what you'll see is a good mix of a variety of different types of thoughts. Some good thoughts, some bad thoughts, some really crazy thoughts, and without necessarily judging, if you just observed, I think that slowing down process, that emotional amplitude reducing, will happen automatically. It may not happen the first time, may not happen the second time. Like many other good things, it sort of happens over a long stretch of time. So silence is an important, very important aspect of it. Some have, some take to just going on long walks. I just recently read this book by Bill Bryson, who Walk in the Woods. So some take different approaches to getting that solitude and calmness into their life, which helps them think clearly. I live in Chicago almost 6 months of the year, 6 to 8 months of the year. It's pretty darn cold. I don't go on those types of walks. And I take a few different paths to get my solitude in. I'm still working. I'm a work in progress in this regard, and still working on it full force.
So that takes us into your life as a money manager, and you are the founder, president, and portfolio manager of SVN Capital. So can you please tell us a bit about how you operate?
Yeah, just as a quick continuation of the initial background that I gave. After graduating from the University of Chicago, I worked as an M&A banker, first in the East Coast, then in the West Coast. I was at Alex Brown in Baltimore, in the East Coast, San Francisco, in the West Coast. I returned to Chicago to set up a small financials-focused hedge fund. I then worked for a couple of storied Chicago-based investment firms, Advisory Research first, and then Keeley Asset Management. All through that process, particularly after I joined Advisory, I read the classics on investments by Ben Graham, Phil Fisher, Buffett Letters, and I was a classic value investor in that sense. Value investor in that investments were focused primarily on valuation-based cheapness. It took me a while, and that's, I think, based on at least the type of individuals that I have followed and tracked. It's not surprising that I also went through this process. Because it's because the valuation aspect is somewhat easy to appreciate and understand. Ben Graham's initial teachings are a lot more appealing than, for example, Phil Fisher's or, Buffett's phase 2. I'm not even talking about Buffett's phase 3 of Apple and many others. And so that's how I sort of have evolved. Today, my strategy at SVN Capital, it's a long only, global with some caveats, concentrated portfolio of equity securities. My investment criteria entail getting an affirmative answer to the following 4 questions. First is the proverbial circle of competence question. Do I understand the business? There are industries and sectors like oil and gas, exploration, production, or biotech, or mining, or Bitcoin. Those are all areas that are outside my circle, and so I stay away from those. Fortunately, there are a few that I do understand, and that's my question number 1. Question number 2 is it a high quality business? Even though quality by its very definition has non-quantitative features, since financials are available, we are able to put some quantitative angle to that as well. And so I evaluate the quality of a business based on both qualitative features like competitive strength and quantitative features, a number of different metrics and valuation approaches. Number 3 is it run by honest, competent management team with skin in the game? Typically, owner operators are a lot more appealing to me in that regard. And then finally, is it available at a reasonable valuation? So it's across the board. any country, any company I'm looking at, those are the 4 questions. I end up spending a lot more time on question number 2 and 3, quality of the business and quality of the management team. And the approach is to avoid the 3 T's that are the bane of investing: turnover, taxes, and transaction cost. So I currently have only 11 securities, and I just started buying one earlier this year. I don't trade much, and the objective is to double the capital over a business cycle. Business cycle is 5 to 7 years, and not that I have to end that investment after that business cycle is over. Obviously, if they're performing well, the longer the better. But that's the objective, and that's the strategy. So it's a concentrated global portfolio of equity securities mixed with a healthy dose of patience to allow compounding to work.
Sounds very promising. But you
Thank you.
You've only had it since 2018, so maybe it's a bit short time. But how has your performance been?
So far, okay. Could be better. Could have been better. If anybody wanted to time the market, I think they should reach out and talk to me, because I seem to know the exact right time to start and get clobbered. It's a fairly long duration strategy. I always tell my prospects that, give me at least 5 years to look back for you to be able to evaluate the quality of the performance and quality of the portfolio itself. Yeah, it's just a couple of years since I started, and I hope to be able to meet the objective when we look back 7, 10 plus years later.
And you are open for new investors, or?
I am.
Something I thought about when reading this book, and something we have touched upon with several of our guests, is the importance of building a strong pattern recognition as an investor to identify new opportunities. And some can call this intuition, and I think that is a bit related to spiritualism. Is that something you think about and use when investing?
Yeah, that's a very interesting question. I think I do, and I'll try and explain as to why and how. Intuition is a very interesting word. The way at least I understand this is it's a process that gives us the ability to know something without analytical reasoning. And, it bridges the gap between conscious and the non-conscious part of the mind. And also between instinct and reason. We need both instinct and reason to make the best possible decisions, particularly in investing. And so, the tools I use, journaling, for example. Barton Biggs, in his fantastic book, The Diary of a Hedgehog, he says that it would be better to write down the emotional trips as it happens. While I don't necessarily write down things as it is happening, I maintain a regular journal that aids in this process. And then that solitude, that silence, that allows full-fledged dialogues to happen within my own mind. And so I to answer your question, do I use intuition for the investment portfolio? I think a lot of us do. I certainly seem to, since as I mentioned, I use journaling and this silence to be a part of my daily routine. I don't know if that answers your question.
Definitely. Interesting. You really thought about it, and you seem to be very aware of it.
And is it just a follow-up question on intuition? I guess, I mean, you're trying to find really the great businesses out there. And is your intuition often right? I mean, from a perspective of you're starting to research a business, and you can, at least I feel that if I've done some research, I can see, okay, I think this is a great business. But I'm not sure, of course. I need to do the deep due diligence after. But how is it for you? Is it usually the case that you confirm that you're right in the beginning, or?
No, not really. I would say it's a mix of a number of things. It takes a long time for me to get that conviction. For example, this particular investment that I've started buying this year, and I remember looking at this almost 2+ years ago, passed on it for a few different reasons. And I kept monitoring their performance, the stock price, reading up on their transcripts, and generally kept a quick tab of what's happening. And that's fairly typical, at least the way I operate these days. But sometimes what happens is these types of businesses that I've been monitoring for a variety of reasons. For example, in 2020, I remember adding Copart to the portfolio. Now, this was a company that I had actually misanalyzed back when I was in advisory research, in 2009, 2010 timeframe. I was trying to put a value on just the real estate part of Copart, completely ignoring, because real estate had been the epicenter of that turmoil. I was trying to see if I can actually just value the real estate part of it. And that was just a completely messed up way to look at a company like this. And so, I never really, we didn't buy into Copart at that time, but on and off, I would go back and look at their performance, their annual reports, and it kept happening. And in 2020, because of what they do, to your listeners that may not be familiar with Copart, it's the largest salvage yard company in the United States, where they store all these vehicles that are either dinged or damaged. It's essentially the eBay of dinged and damaged vehicles. They auction the vehicles, and the buyers are U.S. and non-U.S. as well. And because of what they do, in 2020, when COVID hit, traffic on the road declined precipitously. People were not going to their offices. And as a result, the stock got hit. Was down as much as 40-45% within a very quick span of time. And I ended up adding it to the portfolio. I'm a happy investor, still delighted with how they're operating today. But that sort of development happened within a very short span of time. But the analysis, it goes back a lot longer on that name, and so the quality analysis is something that I undertake from a variety of different angles. The competitive analysis is an important aspect. In this case, essentially, there are two companies that do this. Copart is the dominant salvage yard operator in the U.S. And beyond that, look at the balance sheet. Is it a self-funding mechanism? What have the returns been in cash, not necessarily just the GAAP earnings or IFRS earnings, but in cash? And how has the management team used that capital? In this case, essentially, they're not returning it back to investors as dividends. or buybacks. They're very opportunistic with buybacks. They just go acquire land for more salvage yards. And that's been a phenomenal use of capital from us, the investors' standpoint. So evaluate quality from a variety of angles. And I have not been right all the time. If that was one of your leading points in that question, I've made mistakes. I'm sure I'll make more mistakes, but hopefully I've learned from some of those mistakes in the past. In the past, the analysis of quality was not necessarily this focused from a competitive standpoint or from a structure standpoint. And all those have been big lessons that helped me run SVN Capital today.
That's interesting, and I mean, I didn't want to ask that leading question, but in a bit the question was more about that. I mean, you increased your pattern recognition, and maybe now that you are becoming more and more of a investing master. I mean, you do some checks before you even start to look at a business. So of course you have some knowledge about it, and you wouldn't do your deep work if you didn't think that this is a good one.
Yeah, absolutely. And the first and foremost question in that regard would be the competitive strength of the business. If there is one constant in business, it is reversion to mean. If a business is generating 20% return on capital, invariably there's going to be some kind of a competition that will bring that number down, and that's the constant in the business world. But there are some businesses that sort of either avoid this reversion to mean, or at least able to defer that reversion to mean. In fact, there's a fantastic speech by Peter Thiel, which is available on YouTube. He gave this speech at Stanford in 2017. I think it's titled "Competition is for Losers." It's 50 plus minutes, and I think it's I would highly recommend it. In it, he says, competition is good for capitalism, but it's not good for capitalists. While it may be a little jarring to hear from certain angles in the community, I think it is a very powerful statement. And so competitive analysis is one that I focus on early on these days, and try and avoid highly competitive areas, even if, say, the returns have been good or the quality of the management team is good, because eventually the reversion to mean disease will come back to bite them, come back to hurt them. So that's the first point of analysis, and then later on move on to some of the more quantitative analysis before spending a whole lot of time trying to understand the history, trying to understand the future.
So I wanted to ask also, what's your common biases as an investor?
Yeah, I think anchoring or confirmation bias is one that I'm always working on. In the past, I was also a lot more worried about overconfidence. But I think, I don't know this for a fact, for me, I'm a lot more satisfied with the approach that I take these days with this ego reduction, self-realization exercise. And so the overconfidence part, I think I am trying to successfully reduce that. But this anchoring or confirmation bias is one that I think I still need to improve upon. For example, the price of a stock that has gone up since I looked at it in the past. It still has an impact on how I think about investing now, now that the stock has gone up X%. While I remind myself that that is probably an anchoring or a confirmation bias, I still find it difficult to get over that hump. And I'm sure there are other biases, but that's the primary one. And the one that I'm constantly worried about is this overconfidence. I just don't want to fall victim to that, into that trap.
And have you found any sort of solutions to the anchoring bias?
I haven't, or else I wouldn't be bringing this up. Maybe the solution is probably constantly reminding myself that there is a possibility of this bias, and I may have to revisit those situations again after I have sort of come out of that time period.
In the book, I think it was very interesting also with the overconfidence, as you speak about, that all these so-called masters, and they think very highly about themselves.
Yeah.
And moving over to the people's part, because to me, this book is one part is so many lessons about looking inward and your own journey, but another big part is the search for a teacher or a master or an expert. And Brunton, he meets so many interesting characters during this journey, and you call some of them quacks and some might be true masters, but it's also this discussion with the people he meets during the journey. Some say that you need a true master to absolutely succeed, and others say that no, it's better that you just follow your own path and don't listen to others. And to me, this really relates as an investor. I'm always looking for inspiration, but I'm also trying to have room for independent thinking. So I'm curious to hear your thoughts on this.
I can certainly relate to that question myself. See, the thing about spiritual pursuit and investing, at least the way I do it and the way you folks do it, is that it's an individual exercise. It's not a group exercise. Index investing, or the so-called active investing, that's closet indexing, that's more of a group exercise. So that's probably the reason why you're asking me this question as to whether I'm able to relate to this or not. I absolutely agree that to hone this craft, it helps to have a master. The master need not necessarily be in a human form, and that was a surprise for me when I started digging through this book and the other books that I stumbled upon. It need not be in a human form. In fact, Ramana Maharshi, he considered the hill Arunachala, which is the foot of the hill. He actually lived in the hill for a little while, but his ashram is at the bottom of the hill. He actually considered the hill to be his master. For us mere mortals, I think we have books. We have lots and lots of books. That's why we read so many books. Each one is a potential master. And after thinking and reading about a subject, about whatever it may be, for a while, the mind gets to a point when it's ready to accept the real master. Since we are talking about investing, let's consider what happened. How Warren Buffett sort of stumbled onto this spiritual path. He was a voracious reader. He'd read so many investing books, mostly technicals and, not necessarily investing related. And then he stumbles onto Ben Graham's book. and he devoured it, and in his mind he was ready to meet the real master. And the rest, of course, is history. Now, there's an old Indian saying, when the student is ready, the teacher will appear. And so, the relatable part for me to answer this question is lots and lots of books. And when I'm ready in a particular area, I will meet the true master. I may not know who it is. As we sit today, since I'm so committed to this spiritual path, since David Godman is still alive, I think of the day when I will be able to meet him in person, and that may be the master that sort of helps me out in that path. Of course, we have lots and lots of investment gurus and teachers. I'm sure you're going to be in Omaha in a couple of months. We've got two great ones ready to teach us again. And it's up to us to get the mind to be ready to accept those lessons. And so, the relatable part is an important one, and I think we just need to get the mind, hone the mind to a point where we are ready to accept that master.
Very thoughtful answer. Because I've been thinking about this more from a people's standpoint, and not that it could be something else than a person, but of course it can.
Yeah.
But if we stay on the people side, because also when judging CEOs and management and other people, which we have to do in as an investor, we need to determine which ones are real and which ones are pretenders. And I think when I read this book, it was just fascinating to see that during his journey, the best masters, what I could see, they live apart from the world, and they do not seek fame or followers. They are humble in appearance and humbler still in mode of living, and they allow everyone the utmost freedom of action. And then when we look at the worst pretenders, my summarizing part there is that they suffer from colossal delusions from their own greatness.
Right.
He mentions that they are prophets whose predictions are seldom accurate. They have a big need for attention, and their identity is attached to this role, and they speak bad about others. So I think this is a great list for when you look at some like people in every aspect. But is there something you think that is missing from this list when analyzing businesses and people?
Well, you have really annotated the book quite well.
Thank you. Dissecting it.
Yeah. Evaluating people is an important craft, and for what we do, as you mentioned, evaluating management teams, it's a craft that sort of has to be honed over a period of time. But that's a craft again that lies between instinct and reason, I think. As investors, we want management teams to be good stewards of capital, and it's an important tool. As I mentioned, that's the third question in my investment criteria: honest, competent management teams with skin in the game. And what can help us, filter out the bad ones from the good ones? I think it just happens over a stretch of time by sheer practice. As you laid out, there are, in addition to what you laid out as far as the investment side of things are concerned, there are a few other data points that may help us with that evaluation. Ownership interest, particularly in the West, it doesn't necessarily apply across the world. Parts of Asia, ownership interest may not necessarily mean the same thing as it means in the West. But generally speaking, ownership interest, compensation structure, and incentive programs, they can all sort of give a good color as to how good a steward a particular management team is. Another important signal would be from history. If we it was, I think, Winston Churchill who said, the farther back you look, the farther forward you will be able to see. And I typically look for at least 10 years of history, operating history. Some of the companies that I own have not necessarily been public that long, and I'm not able to go all the way back 10 years. But, looking back in history is an important tool, I think, particularly during troubled times, the COVID kind of troubled times. I'll give you a couple of examples. Using Copart, for example, as the first one. Back in 2008, financial crisis was still raging on, full steam. It didn't necessarily turn until March of 2009, right? So late 2008, the founder, Willis Johnson, who was the CEO, and his son-in-law, Jay Adair, who was the president at that time, they went to the board and said, we would like to restructure the compensation program. They just took $1 in cash and 1 million options each that vested over a few years. Willis Johnson has retired since, and Jay Adair has continued that policy, 3-4 times now. That by itself doesn't necessarily give us a great picture, but the cash compensation expense that was saved at that time and since is one good indicator. Plus, the way they were committed to the business, from how opportunistic they were in buying back the stock a few times later. They don't still have a regularly scheduled buyback program like most of the companies do. As I said, they don't necessarily return capital via dividends. So, they have skin in the game. Both of them still own a chunk, even though Willis Johnson has continued to sell down his stake. He's in his late 70s. And I think that kind of a history, along with the compensation structure, the incentive structure, ownership interest, sort of gives us a little bit of color to evaluate the quality of the management team. Another example is, I'd say, a company called Heiko. It's a company that makes aircraft parts, both for commercial and for defense. It's controlled by this family, the father and 2 sons, the Mendelsons, because of what they do, essentially providing parts, aftermarket parts for commercial aircraft. The business was hurt badly in 2020 when COVID hit and travel essentially came to a halt. And, they immediately went into a kind of save cash kind of mode. The senior management team, the C-suite occupants took a pay cut. They eventually had to lay off a few, but initially it was just a furlough. But they didn't necessarily take any incentives, for that period. And they've now restarted, now that the travel industry has come back and their own business has improved. They've now restarted it. I look at that compared to, I have one particular peer company in mind. I won't mention the name, but they essentially went through the same process, but it felt like they just kept moving the goalpost because the game had gotten a little tougher. And it sort of, gives you a good comparison as to how management teams work during crisis periods like this. And that sort of is a tool to help evaluate the quality of the management team. So while there is a qualitative aspect that one can hone just by being invested, being active, meeting others who know the management teams. That's just a qualitative aspect, but there are fortunately some quantitative data points that we can use to evaluate the team. So that's all from an investment standpoint. But in the case of this book by Paul Brunton, I don't think he had any quantitative metrics to rely on. It was purely a qualitative feature. It was intuition. It was his own reasoning, and that's how he sort of came to write this book.
But it seems like an important criteria for you is that the business you invest in should have gone through difficult times, because that's when you really see.
Yeah, I'm not sure if I'm really looking for them to have gone through a difficult time, but we fortunately have enough data points to go back, right? And we can certainly use the history to provide some color about potential future. Should something like that happen, it is not 100% certain that they will do the same thing again, but it at least gives you an interesting data point. So yeah, I try and go back to see how they have behaved.
So speaking about heritage and history, and with your background, I was a bit interesting. It was something that I thought about in the book, is that many people that Brunton is meeting, they are worried that India is losing their touch with its spiritualism and culture due to Westernization. And this is in 1930s. So what is your view on this today? I mean, many people here in our office, we do yoga, we have meditation, but is it really the true practice?
Yeah, I mean, that's again, as I said, it's an individual exercise. If the question is, and I'm worried about this influence of Westernization on some of the spiritual aspects of the country, I am not. I'm absolutely not worried at all. And here's why. I don't know if you remember this. Bill Gates, years ago, he made that very famous comment, right? We always overestimate the change that'll happen in the next 2 years, underestimate the change that'll occur in the next 10. The near term is always influencing our mind a lot. Let's go back to India, though. As you know, the Brits actually landed in India in the early 1600s. And they ruled the country for close to 300 years. But even prior to that, the French were there, the Portuguese were there, the Dutch were there. And all through that, Hindu country, India, was ruled, a big portion of it at least, was ruled by Muslims, by invaders from Persia. And, a country that has survived these types of influences, upheavals, if you want to call it that, I'm absolutely certain will survive any influence of Westernization that it's going through now.
And are you investing in India?
I'm currently not. I'm more from a technical standpoint, because as an American, I'm an American citizen now. As an American passport holder, or as a non-Indian passport holder, one has to go through a few hoops to get clearance from SEBI, the Securities Exchange Board of India, to be able to trade in India. And I haven't gone through that hoop yet. And there are some fascinating businesses. I'm just keeping an eye as a bystander from the sideline. Not ready yet.
And we spoke a bit about change, and something that probably won't change is this ultimate search that the human has to find happiness. And that is kind of my main takeaway and conclusion from this book, is that everyone is looking for happiness externally, or most people do at least, while really the true happiness is in the human nature, and it's found inside. So we just need to find our true selves. What are your thoughts about this? Have you read the Almanac of Naval Ravikant, for example?
I haven't. I see it being talked about very extensively on Twitter, other sources, but no, I haven't. I've listened to his podcast. I keep listening to his, quick snippet podcasts all the time. But I don't know to what extent Warren Buffett is inclined to spirituality, but he has written about this extensively. You may wonder why or how. Now, he said the big question about how people behave is whether they've got an inner scorecard or an outer scorecard. It helps if you can be satisfied with an inner scorecard. What a powerful statement, right? And I'm sure he's not thinking about this from a spiritual aspect, but I remember reading this years ago. And I don't know if you've read the book Snowball, Alice Schroeder. She says Warren lays out this concept in a very interesting framework. This is the classic old Warren Buffett coming at this from a somewhat I don't know if it's coming at it from a slightly quirky angle. His point was, would you rather be the world's greatest lover, but have everyone think you were the world's worst lover? Or would you rather be the world's worst lover, but have everyone think that you were the best? That's an interesting way to think about this. But this guy, Shane Parrish.
The Knowledge Project.
Yeah, the Farnham Street.
Yeah. He
sort of retweaked that question and provided an answer to your question. I remember reading this, and he sort of rearranged the question and said, in the investment world, if the world couldn't see your results, would you rather be thought of as the world's greatest investor, but in reality have the world's worst record, or be thought of as the world's worst investor when you were actually the best, right? So all this is, essentially saying it's better to have that inner scorecard and be not influenced by some of the external factors. And again, I bring it back to this ego reduction / self-realization exercise, which is all internal, nothing to do with external.
And have you reached that state of happiness?
I wish. I certainly wish. No, I haven't. This is, and that's the best part, right? You kind of evolve every day, through sheer practice, and hopefully there will be a day when, I don't know, that'll probably be the day when I meet David Godman in person, and I can say I have evolved. No, I'm not there yet. A long ways to go.
Life as an investor is a tough one.
Absolutely is. And rightfully so. I mean, if it was easy, everybody would be doing it. Everybody would be Warren Buffett.
Yeah, and we learn so much about ourselves and the world.
Yeah.
And I was thinking about what you said earlier about that. I mean, a part why we read books is to find our own masters.
Yes.
But in the end, if we read the book that you have recommended today, it's also, I mean, you need to figure out when you more or less know, when you have settled your philosophy and so on. And I was going to ask you, I mean, you have read many books over your career, and how much of your current reading is books compared to 10Ks, for example?
Yeah, it's actually it's a mix of both all the time. I maintain a log of all the books that I read. On an average, I seem to go somewhere around 35, 30 to 40 books a year is what I seem to be averaging at this point. It's a, I wish I had, such a, the wide reach that Charlie Munger recommends, the 100 mental models in the lattice work. I certainly don't. My interests are in business biographies, autobiographies, biographies, and investment related books, and I sort of mix them up with the Bill Brysons of the world and Siddhartha Mukherjees of the world, sort of trying to balance them out. And I wish it was a lot wider than that. But I'm spending, I don't know, depends on what time period it is during the year. Earnings season, almost 100% of the day, I'm reading transcripts, companies, the peers, updating my numbers and stuff like that. But off earnings season, it's a good mix of, books and coming up with ideas, reading other annual reports and research reports and things like that. So it sort of moves around a lot, but I'd say on an average about 30 plus books.
And how do you select that? I mean, there's such an abundance of books, and there's new books coming out, there's classic, you can reread books.
I don't reread them as often as I would like to. This one particularly, Search and Secret India, I've done a few times, but I don't reread them as often as I would like to. A number of different sources, the bibliographies in the back many times have some good recommendations. Friends, and other readers put out their notes, and sometimes in talking to them, I stumble upon certain good books. It's a variety of different sources. There was a time when I used to think, when I used to question as to where my next book was going to be. Now, you're looking at the office here. We've got close to 650 books, and there's a big pile to my right.
Sounds like a dream.
There's a bigger pile and there's a smaller pile. The bigger pile is the books that I've read, but I need to update the annotations onto an app. And the other pile is the one that I'm going through. So it's an ongoing process. Certain days I spend more time books, more time on annuals.
And if you could only keep 3 of those 650 books, which would those 3 be?
My first recommendation would be, I think this is by far the most underfollowed, underrepresented investment book. It's called Off Long-Term Value and Wealth Creation by an Indian manager. His name is Bharat Shah. Unfortunately, the book is not available on Amazon or other sources. But if you or your listeners wanted to Google it, it seems to be easily accessible on the net. A phenomenal book. The Quality Investor. He invests exclusively in India, by the way. He wrote this a number of years ago. He hasn't. I've requested him to update the, come out with a new edition. He just laughs it off. But I think it's a phenomenal book. It's only, it's a 100 plus page book, but the first half, 50 something, is where the text is. The second half is more tables, more India related, and may not be of much use. But it's a phenomenal investing book.
What is your main takeaway from this book?
The focus on quality. The focus on quality and how not to use valuation as the primary source of your investing ideas. It's an important criteria, as I've laid out in my investment criteria. It is part of the criteria, but it is the last of the four. And perhaps that's another reason why this book resonated well with me. He goes on to many other aspects. Quality businesses don't necessarily trade at a cheap valuation. You can sort of wait out for crisis to hit, like a COVID or a 2008, but that's not an investment strategy. And so it's better to invest in quality. And during those time periods when things go crazy, perhaps add more if you have the cash. So that would be my number one recommendation. My second recommendation would be this book by William Poundstone, a title called Fortune's Formula. Not sure if you've read it. The originality of the thinking, Ed Thorpe, who is a mathematician, sort of connects the quantitative aspect of gambling to eventually investing. And, it's a phenomenal book, the originality of the thought process. Of course, we are long-term investors, and that may not necessarily resonate well with an investor standpoint, but just the raw power of the brain of Claude Shannon, Kelly, and particularly Ed Thorpe. I remember I picked up this book, and it was late at night. I had to, unfortunately, I was sleepy. I had to sort of put it down and, devour the book the following day. And I don't necessarily read books that way. It generally takes me a few days, but this one I just couldn't put it down. And so that would be number two. And then, Buffett has recommended this book. I didn't necessarily buy it at the time when he did, but this book titled Reading Between the Lines by Rittenhouse. It's about evaluating management communication. One of your questions was about how do you evaluate management teams. And this is a part answer to that question as well. She goes on to analyze letters and other communication from management teams and sort of literally reads between the lines, uses the terms, phrases, and many other aspects of their communication to make her decision about the quality of management teams. Well, there are, hundreds and hundreds of other books. I've listened to some of your previous podcasts, and some of your guests have made some fantastic recommendations, and other podcasts as well. And so, from my angle, somewhat of a, hopefully an interesting list, but a quirky list that answers your question.
Thank you so much for that, Shree, and thank you for taking the time to come on the podcast to share your thoughts on how to become a better investor and person. Do you have something more you want to add before we finish up?
Absolutely loved our conversation. The questions were profound. Many of them I had to really think deep, and sincerely appreciate you having me on your wonderful podcast. Wish you the best in your pursuit. Hopefully it's also combined with some spiritual aspect as well. And look forward to staying in touch. Look forward to meeting you in Omaha, both of you. And look forward to, keeping in touch. Thank you.
Likewise, Shree. And just the last question, where can our audience follow you?
I have a website, www.svncapital.com, where I publish my writings, my interviews, and I write to my investors twice a year. I don't put the letters on the website for a couple of technical reasons, but generally everything about me is available there. I'm also relatively active on Twitter, not quite as active as I would like it to be, but my Twitter handle again is @SVN Capital. So those are two sources. I'm also on LinkedIn, but much of what is available either on my website and Twitter would be repeated there.
Thank you so much, and see you in Omaha.
Thank you. Thank you for listening to Investing by the Books, a podcast by Redeye. Follow us on Twitter @IB_Redeye and email us at ib.podcast@redeye.se. To improve, we'd love to hear your feedback, so please rate and review us. Notice that the content in this podcast is not and shall not be construed as investment advice. This information is meant to be informative and for general purposes only. For full disclaimer, visit redeye.se. I'm your host, Eddie Palmian, and until next time, I sincerely wish you the best of luck on your journey through life and investing.